think realizing you're a business owner now, your whole mindset needs to change.
Yes.
And so you got to treat what you're doing as a business. From Elon Musk to Warren Buffett to Jeff Bezos. What also are they good at besides making money? Doing it in a tax efficient way and knowing the tax game. You're optimizing and paying as little tax as possible because the only thing that matters is the money you get to keep.
You're not going to be an influencer forever. This is the athlete issue. You know, their average NFL player is 6 years. You had 6 years to make money and set it aside as much as you can. Welcome, everybody, to the Main Street Business Podcast. My name is Mark Kohler. I'm here with Matt Sorensen. This is your holiday special.
This is your holiday special, and we've got some good news and bad news, I guess.
Yeah, I know. If you're making money online as an influencer or any revenue from your videos or just kind of that unique revenue that can happen that didn't even exist 10 or 20 years ago.
Yeah.
It's the new frontier. And a lot of people think, oh, well, I don't have to claim that, or, well, I get to write this off. Well, think twice. And today, I think we've got to hit some of these issues that people are not talking about.
Yeah, and this is reality check time. The good news is we love that if you're making money online, you're on YouTube, you're on a social channel, you've got some products, maybe you're doing some affiliates, you've got revenue, you've got expenses. Guys, we love this. You got a freaking business. Sky's the limit. You're in control of your own destiny, and you got some awesome tax strategies. But people are going way too far with this, and they're getting into tax fraud or tax evasion, and not good tax strategy. There's a big difference there in between a tax strategy and what the IRS will start saying, that sounds like a tax scam.
Yes. Okay, now let's talk about issue number one. What is income? Let's just talk about that. And if you heard I did a little prop while you were talking. Did you hear that crack of my Rockstar?
I did.
It was nice. That is the Rockstar Recovery. No carbs, no sugar, lemonade flavor. Just a little bit of juice in there called caffeine. It's nice.
Yeah.
This mid-morning boost. Well, I am trying to, build a relationship with Rockstar, and I send them some vids, and I tag this, tag that on their channels. Well, about 2 months ago, they sent me a case of Rockstars. They said, Mark Kohler, thank you for talking about our product on your show. I was like, well, thank you for recognizing my passion and love for the Rockstar product.
Yeah, they're like, we've got skydivers, snowboarders, motocross riders, and the coolest CPA on the planet.
Damn straight.
As an ambassador for our brand.
That was a badge of honor for me. I got Rockstar sending me product. I mean, Steve Pastrano, suck it. All right, okay.
Travis.
There we go. So I'm like Travis
Pastrano.
Okay, Travis Pastrano, you can suck it.
Yes, Steve Pastrano's the accountant in New Jersey. That's a different guy.
Right. I don't know if we're going to edit that. That was, good riffing going on. Okay, sorry, Travis. All right, now, with that said, when I received that case of Rockstar, I have to claim that as income. People, did you hear that? That is what I'm talking about. What is income? When a company sends you product, you have to claim the fair market value of that product. Now, that could be, well, I'm just going to do a box opening. I'm just testing their product. I'm just whatever. Okay, soon as you're done unpacking it, and you repack it and send it back to them, I'm okay with that.
Yeah.
But no, Mark Kohler drank all of his Rockstars.
Yeah. Because you like them and you find value in them. Now, if Monster would have sent you some drinks, you would have been like, garbage. I'm not using these. Return to sender. Okay? But Mark, Rockstar didn't send you a 1099.
Ooh, I love this.
So you don't have to claim it.
Oh, yeah. Isn't that nice?
Yeah.
Wrong. I thought if you didn't receive a 1099, it's not income. Or if they didn't send it in my PayPal report or my Venmo report, or that's why I take cash. That's why I do farmers markets on the weekends, because if I take cash, it's not taxable. No, that's called tax fraud. That's called tax evasion. Jerk.
Okay, so the first issue of what is income, obviously I'm making revenue. People are paying me for services, or I'm getting commissions or affiliate income. But if I'm getting free product because I'm promoting something in my business, that is now income to me, and I need to claim, what do I claim it as? Fair market value, retail value?
Yes, retail value.
Retail value.
Fair market value of what I would have to pay to go out and buy that. Now let's stay with I like your Monster example.
Okay.
So let's say Monster sends me a case of Ultra Zero. Now I do like the feel of their can. I will point that out. It's kind of got that embossed feeling. Now,
Rockstar's watching.
yes, that's right.
Your ambassadorship is on the
Yes.
line here.
No, I've got a fork in the road here. Now, if I go post and say, thank you, Monster, whether I drink it or not, I entered into an exchange with them. They sent me a product, and in return value, they were hoping I would post about it. I did. Therefore, whether I used the product or not, I have to claim that as revenue. They paid me to do something. Now, if I say, Monster, you suck, I'm not going to post on it, and I didn't. Rockstar, did you hear that? I did not post on my Monster case of Monsters that I received. So now I have to say, send it back, or Monster may go, what the hell? And they sue me and go, send back our case of Monster. Or I'm going to say, was that just a gift? And if they go, yeah, that's just a gift, you go ahead and keep it. Okay, I can keep a gift because I never posted on it. And I could, but whether I used it or not is irrelevant. Did I post? Did they send me? Was there an expectation there? And I fulfilled that expectation.
Yeah, and here's if you think from the IRS's perspective, and I know that's not where most of us like to live in our brain, but if you think of the IRS perspective, is they're like, hey, when Rockstar sent you that package, they expense that as a business expense.
That's right.
Okay, and they wrote that off. So you better be claiming it as income because they got you to do something, and for that expense. Whereas if they gift it, and it is gifted, it's not an expense to them, right? And so I'm not claiming that as income on the other side. I mean, you can kind of I think to balance those things out.
Yeah, I do want to say this. Gifts can be a write-off for a business. Like, say Monster is trying to get my attention.
Yeah.
So Monster sends me a gift. They get to write it off of a gift if it's under a certain value, under a certain dollar amount.
Yeah, but if their intention was to get you to post about it and for marketing promotion, I don't know, they can call that a gift.
That's
there's
right.
a little quid pro quo.
There is. Now, what Monster does on their tax return, that's up to them.
Yeah.
But everybody, I want you to know this. The IRS has a task force for this. By the way, they got $80 billion given to them by the Biden administration to up their game on audits. They built a tax force for influencers. And guess how they do this? It's not rocket science. There was a recent influencer audited who went on a trip given to them by a travel agency, and the influencer posted about it the whole time. Oh, we're here in Tahiti, la, 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 la. Got audited, had to claim the fair market value of that trip. And the influencer was like, what? How did you know? You posted about it? So anybody out there, the Beast or whoever is doing product openings, all the IRS has to do is sit there and put some guy in a cubicle, go, watch the Beast. How many products did he open? Write them down. Go out and find out what the fair market value price is. Build me a spreadsheet. The end. Call up the Beast. He's being audited. That's all I have to do.
Yeah.
Did you claim that income or not?
Yeah. And I think it's interesting even on the trip, because if you look in just even my wife's company, they'll do like a trip for you win a trip, you got to go to President's Club, let's say, or whatever. Do you know that they have to put that on their W-2, the value of that trip?
Yeah.
And they will actually then gross up additional compensation to cover the tax on it on top of it. So if you're an influencer and you're getting product for free, you better be getting paid for that on top of it to go promote it, because you just took in taxable income. What's in it for me if I just got free product? I better get payment and affiliate revenue on top of it to cover the tax that I'm going to have to pay on it, and also to try and freaking make some money.
Yes. Now let's get into see this whole question of what's revenue. Matt opened the can on affiliate. Now, if you're an influencer, you don't want just free product. You know that. So when someone sends you a box opening and then they promote it on their post, like Tucker Carlson just did this with the steak company that he promotes. They sent him a box of steaks, and he's there, oh, I love my steaks. And if you go buy it today and use the promo code Tucker, you get 10% off. Well, guess why he does that? Because now he is tagged as an affiliate for that code that he shared with you. He makes money on that. So he's getting two things. He's getting free product, which he needs to claim. Then he's going to get a 1099 from the steak company that says, here's all the people that bought, here's your cut of that through an affiliate relationship. So he's got two sources of revenue there. So I'm glad you brought that up, because that affiliate thing's a big deal.
Yeah, but that's don't just take the free product, right? You're just accepting like a tax problem without any revenue or income.
Yeah. Now Matt's playing lawyer agent here. I love this. He's like, so when I like this. So when someone sends you that box of free product to open, maybe it's new Google glasses. Maybe you're in the tech industry and you're trying out a new keyboard. My son got a free keyboard sent to him to test out and post on because he's got a okay YouTube presence. So they sent him this keyboard.
Yeah.
And so he was like, okay, I need to test it out, rate it, and post about it. And they were go ahead and keep the keyboard. So he has to claim the value of that keyboard. Now, what Matt's saying here is influencer from a legal perspective. This is his Jerry Maguire moment. You say, hey, before I post on this, I'd like an affiliate tag. Because when I post on it and I tell people to go buy it, I want them to get a link from me and I get a piece of that action. Yeah. If not, I'm going to send back the keyboard. And I like what you're saying. Use that because you're going to get taxed on that value.
Yeah, absolutely. And so, like, again, like, what's in it for you? I mean, maybe you're like, well, this is a cool company. I'm trying to make myself look bigger than I am, and I get this opportunity, maybe. But you just got to weigh these things. Yeah. So, and I think if you're an influencer that's going to have a lot of these tax issues, right, you should be able to have that weight to be like, all right, you got to give me something for this. You're either paying me per post, or you're paying me performance, or I'm getting affiliate fees on it. We're gonna there's got to be something coming to me.
Yeah. No, we got a lot to talk about here still, but I just want to back up and say this too. I loved how you started with Matt. This isn't a bad thing. We are happy for you. This is good. How cool is that? You get on Instagram and post about something, and free crap shows up at your doorstep. That's awesome.
Yeah.
Just know that you're in business. See, people, now here we're going to come to what's an expense here in a minute, because you're going to get a lot of write-offs. Cameras and little spoiler alert, we're going to come to that because see, you're spending money to create that post. Your posting is a business. Yeah. So you don't be thinking about all these great write-offs you get without thinking about, okay, I got to claim some income when that crap shows up.
Yeah, I think think of it like this, like you're in the freaking game, all right? Yeah. Now you're in the game, you got to know the rules and the strategies here. So otherwise the IRS is just going to be scoring on you all day long with this income issue. But you've got a lot of things you can be writing off. So like focus on this, realize I got taxable income coming in, but I got a business here, a lot of write-offs and opportunity here that the typical W-2 person doesn't have. Yeah. And I know a lot of influencers, they never even freaking had a real job. I remember I was interviewing one.
You just alienated 3 influencers.
Yeah. No, I remember I interviewed this lady who was an influencer. She's going to do marketing here, and I really liked her, but she's like, yeah, I guess I've never really had a real job. And I was like, oh no. Or they've worked W-2. This is my point here. And you just haven't learned this game yet. So the IRS knows this game, but you should know it too, because there's some easy ways for you to score points.
Yeah. Now let's back up to another major point. I know some of you that are new to tax planning. One of my children, literally Matt, 2 days ago, texted me, and he goes, I got a letter in the mail from the IRS with a penalty. I'm like, oh, shoot a picture of it and send it over. Sends it over. And it was a penalty because this child of mine had not paid their taxes by April 15th. He'd paid them later in the year. And they were like, well, I thought I'd file an extension. Well, the extension's to file, not to pay. And now this is a child of mine that grew up with Mark Kohler at 95 seminars and 10 book signings, a month. And he didn't hear me when I talked about this to ad nauseum to other clients. But it was his reality check of, oh, the IRS wants their money by April 15th, whether I file an extension or not. So many of you that are new to the tax system may be thinking, well, if someone gives me something, that's different than money. If someone gives me something and not a 1099, it must not be taxable. So what we're saying here very definitively, point number one is, when someone gives you a product, that is income, that's equivalent to dollars. If someone gives you crypto, any form of payment. Can I give a quick example?
Yeah.
I'm a big fan of Outlander. Have you watched Outlander?
I've not.
Oh, dude, it's good. And a couple of my kids have read the books.
Oh, okay.
Apparently, they're really good. I like the movie.
I've heard you talk about it before.
Yeah, Outlander's pretty sexy. By the way, I will throw that out.
Okay.
So in Outlander, now see, this is how the tax system started. This was back in Scotland, Ireland, United Kingdom, way back, in the British Isles. The lord of the land would go tax their people in the out in the lands to help, and then they would provide protection. So I'm going to protect you back at the castle if needs be, and I'll send out my little knights or whatever, but you pay a fee, and they would go out and collect taxes. Okay. Now, this is in the Bible. This would be Matthew. No offense, Matthew, the tax collector. But anyway, they would go out and collect. Do you think these little serfdoms, these little serfs that were there working in the fields would pay with money? Mm-hmm. No, they would pay with, here's a pig, here's a chicken, here's some product, here's some grain, here's some whatever. They would pay with product. And so people have paid their taxes for centuries with not money. And so it's kind of funny, we've gone full circle now that people are giving things now, and it's called the barter system. This is in the tax code. Whether you receive cash, crypto, a note, stock, or even product, that is equivalent to cash. So don't think this is the world crashing down on you. This is nothing new, and even in Outlander, people paid their taxes with a pig.
Yeah, and I think, by the way, the other example would be the Sheriff of Nottingham.
Oh,
little Robin Hood, So, also the not a very well-liked tax collector, but
That's right.
would come and take your cattle or your pigs or your land, So, okay.
Yeah, and then it puts Robin Hood in a whole different light, Robin Hood was a bad guy.
Basically a tax strategist. It's like, let me figure out how to keep, more money in your pocket, people. Okay.
We got a con here in the studio on this, too.
Yeah, question. So, if they are beginning, or maybe they've already started their influencer journey, should they start an LLC or separate entity?
Ooh. Okay, so our question in the studio, for those who didn't hear this, is, well, guys, give me some strategy here. Should this influencer start an LLC or whatever? Yes, we're coming to that. See, point number one is, I think, the wake-up call, and I love that question. Point number one was, what's income? And I think that's the wake-up call here, that you're receiving money, the IRS sees it, it's on the freaking web, you posted about it, and you will get audited. Because all of an influencer's dream is to make more money, to make more posts. Well, they're not going away, and the IRS is going to see that. So that's point number one. Then we want to come to expenses, and then I like this. Let's start hitting some strategy and what you do to win the game. So maybe we beat income enough.
Yeah, we beat that. All right, let's talk about the first thing here, which was you need to start separating your business income and business expenses from all of your personal stuff. Okay, so you're going to need the first principle we need is we want a business bank account. Okay, and I want you to start depositing any income you're getting from your business into that business bank account. And then I also want you to start paying expenses out of that bank account. We're going to get to bookkeeping here and accounting in a second, but the very first thing you need to start doing to save yourself and your accountant any headaches is let's start separating this. There's some asset protection reasons later we're going to talk about why that makes sense. But for now, let's separate business income and business expenses, whether it's a separate credit card you're using for business expenses. It can be in your personal name. It doesn't have to be in the business's name. But let's just start separating that, point number one.
I love it. Great initial point. And I'll say the word, get organized. And I know some of you are like, well, my PayPal comes from here. My Amazon comes from here. My Meta comes from here, goes here, goes. It's going all over the place. I get it. So now it's cleanup time. And I like that. And this is where the LLC does come into play, because if you're going to open a business bank account, one of our strategies we'll mention here at the end is get that LLC set up, a new EIN, electronic identification number, go down to the bank. Our law firms gives you a bank packet, super clean, boom, with your BOI report done for you, so the feds are off your back. You go open that bank account, then start reaching out to all of the different platforms that are sending you affiliate fees, or companies that are sending you affiliate fees and paying you this revenue, ad revenue, this, that, and another. Point them all at that one bank account and start having it. And it's not going to be pretty for a while.
Yeah.
I get that.
Yeah.
But it doesn't mean you don't not claim the income. You still got to put the top dollar down of what you got. Maybe 9 different bank accounts, including your mom's, but let's claim that income.
Yeah, and the other thing I would say is on this LLC topic, because a lot of people just think, well, I'm just going to go set up an LLC. Okay, that didn't save you taxes. You have to implement the tax strategies in the LLC to save you taxes. The LLC in and of itself is basically just a business that makes you legitimate. You get some asset protection for the LLC, but let's just say you didn't open an LLC. You just opened a bank account. You're like, I'm Matt Sorensen, sole proprietorship. Cool. That's going on Schedule C of your tax return. If you have business expenses, you get to write them off. I go set up an LLC, Matt Sorensen Industries, LLC. The tax is the same. It's all going on Schedule C on my tax return. It's the same thing. The tax strategies are the exact same thing. So the LLC has been pitched as this solution that saves you taxes. It is not. The strategies you implement is where the tax savings are.
Okay, now let's do an example here. Now, by the way, I want to give a shout out to Kate, a cousin of mine. She lives down in Florida. She's a surfer. She's pretty good, by the way. I want to point that out.
All right.
I'm like, what size board do you surf? She's like 5'6", 5 this. I'm like, wow, man. I'm like 9'6", 10. You know, I'm a longboarder. Anyway, so it was fun. We were talking at a little family get together, and one of her friends down in Florida was given a wetsuit by a local. This is coming around to expenses, but they gave her a wetsuit because she was going to be in a local tournament, a surfing contest.
Yeah.
And here's a wetsuit. Will you wear it in the contest? And you can keep it. And the girl was like, okay, cool. She was in Kate's surfing club.
Yeah.
And she was bragging to Kate, hey, I got this wetsuit
Yeah.
because I'm good, you know, whatever.
Yeah.
And so it was her first experience. Now, it wasn't online. See, again, this is not just online.
Yeah.
So she go surf in this contest, wear the wetsuit. And Kate was saying, does she have to claim that wetsuit as income? And I said, yeah. But I said, but Kate, now she can expense her surfboard. She was like, what? And she's now a quote unquote semi-pro surfer. She is now getting product. And if she wins, she's got to claim that income, any money that she receives in the contest. But she also can now take expenses for auto deductions and mileage, parking at the beach, the surfboard, any other product, sex wax, the whole 9 yards. She is now in the business of surfing. And so anybody listening here that's a regular follower, you may go, well, I have a friend that's doing this. But they may not consider themselves even an influencer. The beginning of the influencer was an athlete.
Yeah. You had to throw in sex wax, didn't you?
Guys, I win today.
This is a surfing product, not to be mistaken.
Oh, yeah.
It's used on the surfboard, okay? I just want to make sure that this doesn't open up all expenses. All right. Okay.
Yeah. Go shopping at Fascinations. Sex wax is a product for your surfboard.
Okay, but let me say this because I think this is a critical point for any business owners is we always say, well, you can't write anything off until you have your first sale. You have to have income to be in business. Well, the wetsuit was income. That's now taxable income. But now this is opening up all these other things in your business. And so let's take that to the influencer because now we're talking about, what about the camera you use for your posts and the stuff that you're doing? What about your home office? Are you using a home office and a space dedicated in your home? You better be taking a home office deduction. What about the travel to go meet people or go to a place where you're going to shoot or film? That's now deductible. Are you taking auto expenses for when you're using your auto? I mean, all of these things now become deductions that you're taking that are going to offset this income that you're receiving. So that's really where we're talking about here in this first principle is we have income, but now we're going to have a ton of expenses that are going to offset that income, and being organized about it with a separate bank account, this could be in the LLC's name, is a great way to start.
Yep. Now, another sister to this conversation is NIL income and name, image, and likeness income for the college athletes.
Yeah.
And they are becoming influencers at the college level, getting paid NIL. They call it NIL income, but it could come from the Alumni Association. It could come directly from the college now. It could come from Nike. And now they go out and what are they asking them to do? Create a social media presence and go out and post because they want to get their money back. You either do well on the field if you're the Alumni Association or the college, but then all these other companies are saying, hey, we want to see people wearing our product because we want to pay you for your name, image, and likeness. So this is another influencer conversation. So whether you're online or an athlete or a performer or this could be in music, it could be in orchestra, it could be, we have a friend of ours that is at Juilliard down in New York, and they're doing a lot of different things to get paid to show up at places. So this is so important. So these expenses, anything you incur to do what you do, and that could be tripods, cameras, website costs, software costs, laptops, phones, cords, chargers, travel, dining, anything you spend to help your name, image, and likeness. And by the way, I'm going to get to a really controversial one here in a moment. Those are a write-off.
Yeah.
Very important.
Okay, let me talk about where these write-offs have gone overboard because that's the other piece of the coin here. One side of it is, are you claiming the income properly? The other side of the coin is, are you taking some BS expenses? Because one thing we've seen with a lot of the influencers is, and these are, I don't care what area of influencer you are, maybe you're a real estate influencer or you're whatever, is they're like, all of a sudden now they're like the tax professor telling you all these tax strategies, and they're getting freaking overboard. Here's the number one. I saw a post about this. If, hey, you influencers, you can write off your Rolex. I bought myself a Rolex, and as long as I wear it in my videos, it's now a write-off in my business. No, it's not.
Yeah.
No, it's not.
No.
Okay, that's the dumbest advice ever. But they're saying, and they're thinking, but that was in my video. You know, I rolled up in this Lambo, and I look cool, and that helps me in my video's performance.
No.
Good luck. Okay, now, let's say you have a channel about watches, and you critique watches, and you make, you know, you go over that. Okay, now you're in the ball game on the Rolex. I could maybe see you being able to write that off because you critique that. Now, if you got that watch for free from Rolex, which is probably hard to do.
Yeah.
But so now we're maybe in the ball game. But I think like some of these like luxury items, the cars, which you can write off anyways if you're using it in your business, but that just placing something in your video does not make it tax deductible.
I love it. Now we're going to throw you a bone here in a minute because we're going to talk about clothing here in a moment, which is on the bubble for me. And it's going to be good.
Yeah, I might go the other way on this.
Yeah, we'll see. Yeah, I'm going to give you my argument here in a moment.
All right.
Let's stick with those luxury items. And I'm so glad you started there because I just saw another influencer the other freaking day standing in front of their Lambo. Oh, you know, I make millions, la la la. And in their mind, absolutely, they think that Lambo's a write-off. No. The only way the Lambo is a write-off if they jumped in it and drove over to Staples to buy a new printer to deliver to their office right after. It's only where you drive the Lambo that matters. Well, I wrapped it. Doesn't matter. You can pay for the vinyl wrapping with your dumb logo, but that doesn't make it a write-off either. Did you drive it for business? Well, no. Then it's not a write-off. Did you race it in a semi-pro race on the track out in Mesquite, Nevada? No. Well, then it's not a write-off. You're not using it to compete, and it's not an advertising write-off. It just isn't going to cut it. The IRS has case after case on this.
Yeah.
Now, I wanted to be an influencer on this point, so I didn't go buy a Lambo. I went out and bought a golf cart.
Oh, okay.
And I wrapped it.
Nice.
It's pretty cool. And I will say it's the Lowe's version, candy. It's a $9,999, top speed 25 miles an hour.
Okay.
I will be shooting some influencer posts in front of it.
Okay.
To mock all you Lambo owners.
Okay.
But remember, is my golf cart a write-off? No, not unless I load it with crap and drive it somewhere for business. So I am taking it to the 360 event next week, and I will be parking it in the valet area.
I like it.
Trying to show it off.
I like it.
And as we drive material around, like cameras, lighting, speakers, it will be a write-off for that brief moment. And so I will have to proportionally decide how much
Can
of
you
this...
do mileage on a golf cart? Or do you have to you probably have to take actual and fractionalize the days of use?
Well, you know, it's interesting. Some golf carts are based on hours. They have a little hour meter. Some are miles. I was going to do, if you kept a logbook, you can say I took it golfing 10 times, but I took it to 2 events.
Yeah.
I would say 2/10 of it is a write-off. So
like that.
a logbook of events, maybe.
Okay.
So I don't know. We'll see. I have not written it off yet. I purchased it in 2024.
Okay.
So it will be on my tax return, my friend.
Okay.
This year. Some proportion of it.
Okay.
Okay.
Right. And that, by the way, that's a great other principle for many of you that do, like, you're an influencer. You're like, well, I bought this thing that's a luxury item that or maybe the auto is probably the easiest because that does actually, you can drive it places for business purpose. But that is where you can have a proportional thing. It's like, well, I do use it personally. I'm going to the club or whatever, you know, 60% of the time. But 40% of the time I am driving it around, going to meetings, conferences, going to a shoot somewhere. And like, that is business use. And it could be a Lambo. It could be a Geo Metro. Do you remember those?
Oh, yeah. Those were hot.
Yeah, so you know, whatever, either one.
Matt used to mock me. When first electric vehicles came out, they weren't Teslas.
Yeah. Mark had a Nissan Leaf, folks. Mark bought a Nissan Leaf. That is like the worst electric car ever. It's like, can we make the like lamest looking car ever?
And then
someone will buy this.
hey, I got the carpool lane when it was first came out.
That's true. This is when
It
you're
was a
in
big deal.
California, you got carpool lane. If, no matter what electric was, even if it was like the dorky Nissan Leaf, they're like, we'll still let you be on the
I got
carpool
beat up
lane.
at a few truck stops, but I took a beating because I wanted that carpool lane. You know, it was important. Okay, now let's talk clothing. All right, so this is called currently, there is an exception. All right, let me give you my argument.
Okay.
Clothing is one where I'm going to be talking to influencers about.
Okay.
On there. And by the way, if some of you are like, my accountant is nowhere near this conversation, get over to markjkohler.com and look at our Tax Pro network. We train tax pros. We have a tax pro certification program with hundreds of tax advisors that speak Mark Kohler and Matt Sorensen. They're there. You can interview them, hire them on your own due diligence. We do not get a piece of that. We just train them. We meet with them weekly, and they have to meet with us weekly to be on the network. They are up to speed on this topic. So if you're looking for that perfect accountant, we got them for you. Or call your accountant and go get certified. These guys know what the hell they're talking about. And we'll send them clients. We'd love that. All right, so the current exception is called the entertainer exception. Now, this was back in the day.
Oh.
Elton John is in the mix on this. There was also Barbara Streisand, Liberace, Lady Gaga, because a lot of these entertainers that would go sing would wear ornate costumes.
Yeah.
It'd kind of be part of the show. Think of Kiss. Kiss was a part of this mix. So back in the 60s and 70s, it actually became a thing to wear over-the-top costumes when you're on stage.
Yeah.
Okay, so they started to write these off. I'm going to write this off.
Yeah.
And IRS was like, you can't write off clothing. You can write off your steel-toed boots if you're a contractor, your scrubs if you're a doctor, but you can't write off an outfit. No way. Forget it. Well, they took him to court and won, and there's been several cases that have substantiated what is now known as the entertainer exception. This is where you can write off clothing if you're on stage. You can write off hair and makeup if you're a model. And yes, if you're an adult performer, you can write off your boob job. If that is,
I thought you were going to say stilettos, but we went into so,
hey, I cover sex talks
medical.
and boob jobs. I mean,
Okay.
this is a very important conversation. No, it's truly a case. I could pull it up here in 2 minutes.
So there's you on OnlyFans,
Yeah.
that's that's an influencer.
Oh, seriously, if you're on OnlyFans, you're writing off all of your cosmetic surgery. Absolutely. There's a case law on this. All right, so now let's fast forward. So we've got someone that's a real estate influencer. They've got a site. They're on YouTube. They're doing their thing. Mark Kohler, Matt Sorensen. We got to look good on film.
Yeah.
We're performing to some degree. Some might call it acting. Some might call this a show. Dinner and a show. Go order lunch on.
I mean, we haven't won any awards yet.
No,
But
maybe we'll get nominated someday. But anyway, the point being, all kidding aside, is could we write off our suits on camera because we're influencers? Now, I think it is a form of entertainment. I think you do have to look good on camera. You have thousands of people watching you, maybe even more so than in a stadium or on a YouTube video. I mean, on a MTV video. Now I'm on YouTube. It's just a different platform, same concept. I'm going to write some clothing out.
Yeah.
Now, how
okay,
much?
now I think here's one thing you got to do with that. I think, and this is in some of the cases too, in the tax law, is you have to show that is not appropriate for regular daily use. So if I have that thing that I'm wearing on set, or I'm Lady Gaga on stage, I better not be wearing that tomorrow or next week when I'm not. Because now I'm getting into this well, is it really personal use or is this really business use only?
Oh, okay.
And I think you got a strong argument if you're like, I never wear that except on camera or on stage or whatever it is. I think you got a solid argument.
Okay.
But if you wear that every weekend out, that's just a personal thing you also happen to wear on camera.
Okay, Your Honor, may I have a rebuttal?
The floor is yours. I yield the
Thank
balance
you.
of my time to the
Thank
gentleman from the great state of Arizona.
Thank you, sir. My rebuttal to that would be, and there are case law that I wouldn't, yes, there might be some personal benefit, but I wouldn't have bought it otherwise. Now, let's get back to some...
That's hard to prove.
Let's get to some plastic surgery. So I'm on OnlyFans. This is within the case. This is within the case. I'm on OnlyFans.
Okay.
Yeah, I've only got 10,000 followers. Maybe 500 more CC might, push me over another 20,000 followers. A little. Okay. larger presence.
Okay.
May I say?
Yes.
Okay. All right. So I go
following.
get some additional plastic surgery. I increase my presence on
Okay.
camera.
Okay.
I get more followers. Now, yes, is there some personal benefit? Yeah, I'm going to go out Friday night. I'm going to go out Saturday night. Sure. Now, okay. Now, by the way, okay, fine. This is. Okay, I'll give you another argument. This is the cell phone case from 10 years ago. People said, "Well, I bought a cell phone for my business," and the IRS is like, "You got to do it proportionally." Fought it. Finally, there was a case in 2006 that said, "All right," because the case was, I wouldn't have bought the cell phone otherwise. I had to have the cell phone for my business. And yes, there's a personal benefit, but I had to buy it for my business anyway. And the IRS said, fine, we're sick of arguing this.
As long as you can show you have a separate line for personal use. then.
Yes. And so they got away with that
Yeah.
because they had to have it for personal use. And let's think of the car. You know, I got to buy a car. Yeah, I use it for business, but I also have it for personal use. So I don't think just because clothing has some personal benefit, if its primary purpose and why I bought it was for the camera, Your Honor, I would argue that it could be a write-off.
Yeah, I think.
Your counter, my sir, my fine sir.
I think that's a fair argument.
Okay.
I just would want something a little stronger. Okay. I think the strongest argument is I never wear that.
Yes.
And that's, you know,
I like that.
The boob job you can't take on or off, okay?
Yeah.
That one's still a little more complicated. All right? The car, I can say that was personal use, that was business use. The costume or the suit or the thing you might wear on camera that was primarily bought for business, and you can say, but I did use it 1/3 of the time personally. Maybe I write off 2/3 of it. I could maybe get a little more there, but I like just the open and shut case of I don't wear it except on stage or on camera.
Okay, this is so fun. One last one. Okay, I went and did a photo shoot. All right, about 3 months ago. My team was like, "Dude, we gotta up your game on your side a little bit.
Yeah.
Those pictures with your, flip phone from 2004, we can't use those anymore."
Yeah.
It's like, all right. So they're like, "You're gonna go get your hair done, and we're gonna go get you're gonna buy a couple new sets of clothes, and we're gonna have makeup there, and we're gonna go do a photo shoot. Can I write off my hair?"
Absolutely.
Well, okay, cool. Thank you. Because
For that time.
But
Not next week.
I had to
not next
rush to
month.
the studio today to look good on camera with the fine Matt Sorensen. I'm going to get thousands of views for this show. I got to look good on camera. I can't write off my haircut from last week. I'm on camera today. Yeah, sure, I had some personal benefit this week, but I got to look good for our followers. And I do this for you people. It really is a sacrifice. It's the little things. Do I get that right off?
Debatable.
Okay.
Are you taking that one?
Well, this is a public.
Attorney-client privilege.
This is public and being recorded. I may or may not. So I cannot recall.
Hey,
Your
you
Honor.
threw yourself into the example here, not me.
Yeah. My tax return is private information, sir. But no, I you know what? I very well may this year.
I get the photo shoot. You did an exact photo shoot. Now, right now, before coming on camera, I could see that too. I mean, I could, and I've thought about getting more regular haircuts myself. And
Do you know what really hurts? You didn't say anything about my hair.
it is looking good. It is looking great.
I brought this up with my counselor, and I just want to say I've been trying, and it's. I'd like you to recognize my efforts more often verbally. Could you recognize those verbally more often?
I will say you have upped your game tremendously. I'm starting to look bad.
Well,
it used to be I didn't have to try
you
that
don't
hard.
need to go that far, but I
It
wanna
used to
say
be I didn't
thank
have to
you.
try that hard to sit next to you on camera. And man, you're having to make me work a lot harder. Let me just say that.
Well, thank you. This relationship is important to me. It's give and take, and I'm glad we've had this moment to talk about this.
It's tough.
But so I'm going to write off my haircut because I did it for Matt Sorensen at the least, to make you look good on camera.
And as business partners, that is a qualifying expense.
Okay.
You did
All
it
right.
for me.
Well, no, maybe in summary here, I think this does not have to be painful. I think you need to be aware of these things. I think tax planning can be interesting, and it's easier to save money than make money. By having some strategy, starting with an LLC and a bank account, separating your income and expenses as best you can, tracking, having conversations, listening to podcasts like this, hiring a proper tax advisor. Boy, there was 4 or 5 things there.
Yeah.
What else would be some takeaways or strategy?
I think realizing you're a business owner now, your whole mindset needs to change.
Yes.
You are a business owner. Now people think, well, I'm an influencer. No, you're a business owner, okay?
Yeah.
And so you got to treat what you're doing as a business. Not just about how can I grow and get income, but at the end of the game, and this is what every smart business person knows. I don't care, you go down the list from Elon Musk to Warren Buffett to Jeff Bezos, and we've shot videos on all those, Donald Trump. What also are they good at besides making money? Doing it in a tax efficient way and knowing the tax game. And so the other side of this is you're in that world is making sure you're optimizing and paying as little tax as possible, because the only thing that matters is the money you get to keep.
Oh, and that's right where I was going to finish with my last recommendation is after you take in all that revenue and write off and pay your tax and what do you get to keep at the end of the day, where are you then deploying it? Please be careful. It's so tempting as an influencer to go out and buy those luxury items because you think it's going to increase your followers, and maybe your target market or viewer is impressed by that, and you will. I get it. So there are purchases you might need to make, but I've had a number of phone calls from influencers who are like, okay, I paid way more in tax than I thought I had to. Okay, where do I deploy my money now? Should I be buying rental property? Should I be opening up an IRA or a 401k? And I am like, yes, let's make sure that you're saving your money for the future, because you're not going to be an influencer forever. You know, this is the athlete issue. Do you know their average NFL player is 6 years? Average NFL player. And so you had 6 years to make money and set it aside as much as you can, not live like a rock star. That's not the idea here. So really be careful with where you put your money after you earn it.
Yeah, you have a shelf life in this, you know, that's the thing with Hollywood too, you know,
Yeah.
I mean, that's the same thing with Hollywood is a lot of actors, they have a shelf life where they're hot and they make money, and the rest of the time they're just not, and they're barely scraping by. But when you are making money, we want to talk about deploying that into assets that produce income. That's how the wealthy do it, is you have to make money, but I got to set it aside and deploy it into assets that appreciate over time and that make me money when I'm sleeping. That's how you do it. And Vince Vaughn, I don't know if you saw, I clipped this and had a great social post on it. I thought it was good. Is he talked about making money as an actor, and he was terrified he was never going to make money the next year. And so what did he do? He bought rental real estate. He bought commercial real estate. He's like, I first tried gold, but then gold didn't produce income. She's like, then I decided I'm going to go buy rental real estate. And now he's a pretty significant real estate empire that makes him money, whether he's hot or not in Hollywood. It doesn't matter.
I love it. And also taking care of your initial expenses with this revenue. I love him Once Upon a Time in Hollywood with Brad Pitt and Leonardo DiCaprio. Crazy movie on the story of the Helter Skelter. And I loved in that movie because he said, the first thing all my friends in Hollywood told me to do, this is Leonardo, and this is his character in the show, but a lot of loosely based characters in real life. But he said, the first thing all my friends in Hollywood said to do was buy your home. As soon as you make enough money, at least buy your home. So there you have a place to live, a place to stay. You've got some of these basic costs taken care of. And so as you start building retirement, getting out of debt, owning a home, then it's like next level. Okay, now I need to buy income producing property so that if I can't make money next year, I've got at least something coming in. I think there's so many, and there's multiple ways to go at it.
Yeah, multiple ways to go at it. Well, hopefully you learned something here today. I thought we hit a topic. This was a hot topic. Mark Kinnan is like, I'm like, let's debunk LLC myths, because I'm sick and tired of all these people talking about LLCs as being like a solution to world peace, you know. And it's like, good Lord, if they just had an LLC in the Middle East, we'd solve everything, you know. So we're like, Mark's like, I got a hot topic on influencers. So we went with this one. And I just want to say the last thing here, and I know we've been trying to wrap this up, is I'm like super excited for you. I don't want you to feel discouraged by all this. I'm actually super excited for you because you're in control of your own destiny, and you do have a lot of strategies that you can implement on your tax return that you've never thought of. If you had a W-2 job before, never had a real significant amount of income, you've got a lot of strategies here you can implement. So there's good news.
It is. It's funny. I might even send this podcast immediately out to a client. An influencer that's 21 years old reached out to me about 4 months ago and was like, I got to have a call. I'm making more money in a month than my dad made in a year. And his parents are like freaking out for him too.
Yeah.
And I was so proud of him because he was like, I know this is weird and I know I've got to be careful. What do I do? And so we get it. It can be scary, and in getting knowledge and education is the first antidote to fear. Because the more you know, the less there's unknowns, and the unknown can generate a lot of fear. So let's get you educated and freaking controlling your destiny. So
yeah,
thanks so much, everybody. Fun stuff.
Yeah, make sure you're subscribed. Give us a 5-star review wherever you're at. Kudos. I don't know all the things you can do on these things anymore, but we want to help spread the good word on this. Thanks for being with us. We'll see you next time.